HSM403. Advanced Project Management. Part 3. Planning the Cost Dimension. Presented by Dr. J.P. Becker. Welcome to the lecture. This video has 34 slides and has a duration of about 58 minutes. Planning the cost dimension. There are many reasons to do careful planning for project costs. To begin with, if you overestimate costs, you may lose the job before you begin, because you are not competitive. A good plan includes the identification of sources of supplies and materials, and this careful research assures that the costs are realistic. The main function of a good budget is to monitor the costs of a project while it is in progress, and to avoid cost overruns. Some inaccuracies in the budget are inevitable, but they should not be the consequence of insufficient work on the original plan. The goal is to be as realistic as possible. You cannot estimate the cost of your project until you know how long it will take, since labor is typically the most significant cost item. Therefore, use your work breakdown structure and project schedule as the starting point for developing your project budget. The following has been identified and defined as typical cost components. Labor. This is the wages paid to all staff directly working on the project, for the time spent on it. Overhead. This constitutes cost of payroll taxes and fringe benefits for everyone directly working on the project, for the time spent on it. It is usually calculated as a percentage of direct labor cost. Materials. This represents the cost of items purchased for use on the project. It includes items such as timber, cement, steel, nails, screws, rivets, bolts, and paint. Suppliers. This makes up the cost of tools, equipment, office supplies, etc., that is needed for the project. If something has a useful life beyond the project, its cost should be prorated. Equipment rental. This comprises the cost of renting equipment such as scaffolding, compressors, cranes, bulldozers, trucks, etc., which are used on the project. General and administration. This represents the cost of management and support services such as purchasing, accounting, secretarial services, etc., which are available for the time dedicated to the project, and is usually calculated as a percentage of project cost. Profit. On a for-profit project, this amounts to the reward to a business for successfully completing the project. It is usually calculated as a percentage of project cost. With the cost components identified, and the project broken down into subunits, you can now create a worksheet to determine the costs for the total project. Note that, costing a subunit is sometimes simplified if it is to be subcontracted. Here, the costing process includes bidding for the subunit, selecting a contractor, and then using the contractor's price as the unit cost. Before we practice on preparing a cost estimate for the project you have been using, let us consider the following example. Class exercise. You received confirmation from a client that a contract to build a house was awarded to you. The following information is available from your tender documents and calculations. The contract value is 99,000 Rand. The construction period is 3 months. Total labor cost is 33,400 Rand, and is paid on a fortnightly basis. The total material cost is 36,600 Rand, and paid monthly on 30 days settlement. The value of all the subcontracts on the project is 13,000 Rand, and is paid monthly on a 30 days settlement basis. The total fixed overheads have been estimated at 3,000 Rand, and is divided equally for each month. The total variable overhead costs have been estimated at 4,000 Rand, of which 50% is allocated to the first month, and the remaining 50% is equally divided into the last 2 months. The estimated profit is 9,000 Rand and was calculated as 10% on cost. Retention deducted by the client represents 10% of each claim throughout the project, of which 5% is released at practical completion, and the remainder is released after the maintenance period. The maintenance period is 3 months. Certification takes place once a month, and payment for the certified work should be received 2 weeks after the date of certification. Required. Use the bar chart on the next slide to prepare the project budget and cash flow schedule. income due schedule, and budget and cash flow graph diagrams. On this slide, you can see the bar chart for the project, indicating the budgeted cost allocated for each activity, by period, in this case 2 weeks, and by month, and relative to labor, materials and subcontractors. At the bottom of the bar chart you can observe a table, indicating the total labor, material, and subcontractor costs. You will note that the total labor has been allocated columns for every 2 weeks. Remember, labor will be paid every 2 weeks, whereas materials and subcontractors will be paid every month. On the right-hand side of the bar chart, you can observe an additional 3 columns. These columns indicate the ratio of labor versus material cost, relative to the total cost allocated for each activity. The first thing to do is to consider those costs that will be paid every 2 weeks. In this case it would only be for labor. So, start with the column representing the first 2 weeks of month 1 on the bar chart. You will find that the labor cost for each activity is indicated at the top of each activity bar. Now, add up all the labor costs for each activity. In this case it would be 2,000 Rand and 1,000 Rand, and then write the total amount of 3,000 Rand in the same column, next to the total labor cost, in the table at the bottom of the bar chart. Do the same for the consecutive fortnights, week 3 and 4 with total 5,800 Rand, 5 and 6 with total 4,600 Rand, etc. Be careful, do not add the subcontractor cost. Remember, subcontractor cost is a separate cost item. Next, we shall consider the material costs. Before we start, just remember that materials will be paid on a monthly basis. Taking this into consideration, it is obvious that the material cost for each month should be added together. We will therefore start with the columns for the first 4 weeks, that is weeks 1, 2, 3, and 4, representing month 1 on the bar chart. You will find that the material cost for each activity is indicated at the bottom of each activity bar. Now, add up all the material costs for each activity in month 1. In this case it would be 4,000 Rand, 3,500 Rand and 3,450 Rand, and then write the total amount of 10,950 Rand in the same column, next to the total material cost, in the table at the bottom of the bar chart. Do the same for the consecutive months, that is month 2 with total 17,150 Rand, and month 3 with total 8,500 Rand. Be careful, do not add the subcontractor cost. The only cost that now remains is that for subcontractors. Here, again remember that the subcontractors will also be paid on a monthly basis. You will find that the subcontractor costs for each activity is indicated on the inside of each activity bar. Therefore, similar to adding the material cost, consider the subcontractor costs for each month. In this case there is only one amount for each month. Write these total amounts, that is 1,500 Rand in month 1, 7,000 Rand in month 2 and 4,500 Rand in month 3, in the appropriate columns for each month next to the total subcontractor cost, in the table at the bottom of the bar chart. This brings us to the end of summarizing the monthly cost using the bar chart. The summarized cost schedule, at the bottom of the bar chart, will now be used to prepare the budget. This we shall do on the slides that follow. Before we continue to develop the project budget, let us first consider the following concepts that will be used for developing the budget. Contract value, this is the amount that the contractor has tendered for, and the agreed amount that the client must pay for the project delivered by the contractor. Construction period, this is the agreed period within which the contractor must deliver the project. 30 days settlement, this is a result of an agreement between the contractor and a supplier, by which the contractor is allowed to buy on credit, and accumulate credit for 1 month, after which the debt accumulated for that month will only fall due 30 days after the end of that month. This means payment for products or services delivered is delayed by 30 days. Thus, the contractor has 30 days to pay before interest is charged. Agreements can also be reached for periods of 60 days or more. Fixed overheads, these are overheads that a contractor will incur, whether he generates an income or not. Variable overheads, these are overheads incurred as a result of generating an income, or working on a contract. Retention, this is an agreed amount, usually a percentage of work completed for a certain period, deducted by the client as guarantee that the contractor will complete the project. Maintenance period, this is a period, after the completion of a contract, within which the contractor must rectify any items found to be defective at the final inspection, and which has been recorded on the defects liability list, or snag list. Certification, this is an activity whereby the client's representative, usually the quantity surveyor, confirms that the work claimed to have been done by the contractor is confirmed, and due for payment. Certificate, this is the document confirming the claims for work done during a certain period. Now that we have collected the data by means of the bar chart, and summarized cost schedule, it is time to transfer the information to a worksheet, by which we shall develop the budget, and cash flow for the project. But, before we start with this, let us first consider the information on a clean budget worksheet. You will observe that the worksheet is a matrix of columns and lines. The columns consist of two parts, which, in the first part, will be used to record information from the summarized cost schedule, and in the second part, use this information to develop advanced information by means of calculations. The only complicated part of these calculations is when we have to determine the cash flow for the project. This is where the time when cash flow occurs has to be taken into consideration. The worksheet makes provision for the following information: weeks, labor, material, subcontractors, overheads. Up to here, we shall be recording the information gathered on the summarized cost schedule. The columns provided up to here is flexible, and additional columns may be provided according to the budgetary needs for the project. For instance, you may want to add a column for plant, or any other budgetary information, but, for this project, this is not required. From here on, we shall be using this information to calculate advanced information for developing the budget graph, and cash flow graph. The worksheet make provision for the following advanced information to be calculated: monthly total cost, cumulative cost, expenditure, also referred to as cost commitment, or actual money to be paid, cumulative expenditure, cumulative gross value, net monthly income due. This information will be calculated on another form, and transferred to this column. Cumulative income due, gross cash flow, net cash flow. The columns in the second part of the worksheet, up to here, is fixed, and is sufficient to develop the budget, and cash flow schedule. The purpose of lines on the worksheet is to provide for the timing of the budget. Depending on the budgetary requirements of a project, the timing of the budget is flexible, and you may choose to record information every week, every 2 weeks, or every month, etc. For the purpose of this example, we shall record information on a fortnightly basis. The reason for this is that labor will be paid every 2 weeks. The process of transferring information, and using it to calculate the advanced information, will be explained on the slides that follow. When we record and calculate information, it is always assumed that these costs occurred at the end of a period. For instance, labor is paid at the end of 2 weeks, and we receive a statement for materials purchased during the month at the end of the month. This is very important for understanding the timing of the budget. Let us start with labor, and record the information from the summarized cost schedule. First, refer to the summarized cost schedule, and find the amount recorded for labor for the first fortnight. The amount is indicated as 3,000 rand. Now, transfer this amount to the worksheet, and record it in the labor column, next to week 2. Repeat the process for the second week. Refer to the summarized cost schedule, and find the amount recorded for labor for the second fortnight. The amount is indicated as 5,800 rand. Transfer this amount to the worksheet, and record it in the labor column, next to week 4. Repeat the process for week 6, indicated as 4,500 rand. Week 8, indicated as 5,500 rand. Continue with this until all the periodic labor costs have been recorded on the budget worksheet. Before we move on to recording the material cost, and to simplify the example, let us assume every month has 4 weeks. Let us continue the recording for material cost. Here, The process is similar to that of labor, however, this time, amounts are only recorded every month, or at 4-week intervals, that is at the end of week 4, 8, 12, etc. First, refer to the summarized cost schedule, and find the cost of material recorded for the first month. The amount is indicated as 10,950 Rand. Now, transfer this amount to the worksheet, and record it in the material column, next to week 4. Repeat the process for month 2, indicated as 17,150 Rand, next to week 8. Continue with this until all the periodic material costs have been recorded on the budget worksheet. When recording the cost for subcontractors, the process is the same as that for materials, thus, also recording the cost on a monthly basis, that is, at 4-week intervals, or at the end of week 4, 8, 12, etc. Again, we start off with referring to the summarized cost schedule, and find the cost of subcontractors recorded for the first month. The amount is indicated as 1,500 Rand. Transfer this amount to the worksheet, and record it in the subcontractor column, next to week 4. Repeat the process for month 2, indicated as 7,000 Rand, next to week 8. And continue with this until all the periodic subcontractor costs have been recorded on the budget worksheet. You will remember that the information, relative to overheads, in the introduction to this exercise reads as follows. The total fixed overheads have been estimated at 3,000 Rand, and is divided equally for each month. The total variable overhead costs have been estimated at 4,000 Rand, of which 50% is allocated to the first month, and the remaining 50% is equally divided into the last 2 months. We only have one column for overheads in our worksheet, which means that fixed and variable overheads need to be added together. In order to do this, let us analyze this information in the introduction. For fixed overheads, if we have 3,000 Rand, which must be divided equally over 3 months, it follows that 1,000 per month will be allocated over 3 months. For variable overheads, if 50% of 4,000 Rand is allocated to month 1, then the amount to be allocated to month 1 is 2,000 Rand, and if the remainder 50% of 4,000 Rand is allocated to the last 2 months, it follows that 1,000 Rand per month will be allocated to the last 2 months. In order to allocate the 2 sets of overheads as one amount for each month, we need to add the different allocated amounts for the 3 months. Let us consider month 1. According to the calculation that we have just completed, the fixed overheads were calculated as 1,000 Rand per month for each month, and it was determined that 2,000 is allocated to month 1. The total for month 1 is thus 3,000 Rand. The total for month 2 is determined in the same way, with fixed overheads at 1,000 Rand per month and variable overheads at 1,000 Rand, adding up to a total of 2,000 Rand. The total for month 3 is determined in exactly the same way as month 2. These amounts can now be transferred to the worksheet. Let us start with the 3,000 Rand for month 1, and transfer it to the overheads column, next to week 4, in the worksheet. Do the same with the 2,000 Rand for month 2 and 3. This concludes the recording of the first set of information on the worksheet. We shall now move on to calculating the remainder of the worksheet, using the information that we have just recorded, in the slides that follow. The first column to be calculated, using the information recorded up to now, is the monthly total cost. The reason for doing the calculation monthly, is that financial reporting is usually performed on a monthly basis. It therefore follows that costing is usually also performed monthly, to coincide with all other financial reporting, such as financial statements received from suppliers, measuring and certifying work completed, etc. This is an easy calculation, and all you need to do is to add all the cost elements for month 1, otherwise indicated as weeks 2 and 4. The amounts to be added is indicated as 3,000 Rand, 5,800 Rand, 10,950 Rand, 1,500 Rand, and 3,000 Rand, which equals to 24,250 Rand. Record this amount in the monthly total cost next to 4 weeks. Remember, we assumed that 1 month has 4 weeks. Do the same for month 2, that is weeks 6 and 8, and month 3. The next column to be recorded is the cumulated monthly cost. The concept of cumulating numbers involves adding all consecutive numbers in a list by starting at the top of the list. Every time a number is added, it is added to the cumulated total of all the numbers preceding this number. This process is repeated until the cumulative total is equal to the total of all the numbers in the list. In this case, we shall perform a calculation every fortnight, starting with week 2. Remember, as per the definition of the way cumulation is performed, we make use of every number in a list, even if the number is 0. Although the calculation is easy, we need to take note of the way rows are added. Let us start with the calculation for week 2. We shall use the amount from the monthly total cost column for week 2, and then add it to the cumulated amount preceding this amount in week 0, that is before the project started, to determine the cumulative for week 2. You will observe that the monthly total cost for week 2 and preceding cumulated amount are both 0. The calculation for week 2 thus results in 0. Never mind this, just continue and record the total in the space intersected by row 2 and the cumulated cost column. Now let us move on to week 4. Here, we shall perform the same calculation, but just move down one row for each amount being considered. Thus, you will observe that the monthly total cost for week 4 is 24,250 Rand, and the preceding cumulated amount is 0. Adding these amounts result in 24,250 Rand. Now, record this amount in the space intersected by week 4, in the cumulated cost column. This process is repeated for week 6, again resulting in a cumulated cost of 24,250 Rand. Do the same for week 8, which results in a cumulated cost of 60,500 Rand. And the same for week 10, with 60,500 Rand, and week 12, with 90,000 Rand. Before we continue, let us first conceptualize the term expenditure, or also referred to as cost commitment. Any commitment obligates someone to do something, and is defined as a willing intent to do something. Relative to a contract between two parties, to do something means either to deliver or to pay. In order to understand this concept relative to a project, let us first consider the term committed cost. A committed cost is a cost incurred on a project by means of a purchase order, also referred to as a contract to purchase, for which a business is obligated to pay after the delivery of a product or service. Expenditure, therefore, relates to the outflow or payment of money to acquire something. Is the payment made for a product or service delivered, relative to the obligations in a contract, and puts a commitment to pay into action. Payment may take place at the time of delivery, or it may be delayed, depending on what was agreed in the contract to purchase. We know that for this example, payment to material suppliers and subcontractors are delayed for 30 days. In this calculation, we need to make provision for this delay, to reflect the true timing of the outflow of an amount of money. The result of this calculation will therefore reflect the timing of cash outflow. This forms part of cash flow, and is one of two activities that take place within cash flow. The other is cash inflow. So, let us start with these calculations. However, first, let us refresh our memory. Remember, we have earlier assumed that a month has 4 weeks, which means that 4 weeks equals to 30 days and 2 weeks has 15 days. We shall again make use of the information obtained from the summarized cost schedule, to the left of the dotted line, to record the expenditure for week 2. The first question that we need to ask is, what will be paid after 2 weeks, or 15 days? Before we can answer this question, let us first determine where the first 2 weeks end. You will see that it ends right on the line between week 2 and 4. This becomes our indicator line for the first 2 weeks. This means that, depending on any payment restrictions, everything above this line will be paid after 2 weeks. So, to answer the question, what will be paid, let us start with labor. From the example brief, we know that labor has no delay. We can thus mark the block above the line that indicates 3,000 Rand for labor. Next, let us consider material. From the brief, we know that we shall only pay for materials 30 days after the month end. To delay a payment, we move the payment date backwards, thus, up and away from the indicator line. Here, we allow for 15 days in the first 2 weeks, add another 2 weeks for a total of 30 days, and only after that will the amount be paid. This means that you need to move up 3 rows above the line to reveal the amount to be paid. Subcontractors have the same scenario, and the payment is also moved to 3 rows above the line. Overheads, however, do not have any delays. The amount to be paid is thus also in the block above the line. These blocks now give us an indication of the time schedule by which payments, for the different cost elements, will take place. If you look at the way these blocks, indicating payment events, are scheduled, you will observe that it forms a pattern. Because of the way payment events are scheduled, this pattern will be used to determine the total amount to be paid, for all payments during the project. Incidentally, if you are going to do this exercise on paper, you can use a handy technique to assist you to follow the pattern, when you are adding up the amounts to be paid, for the different cost elements. All you need to do is, take another sheet of paper, lay it over your worksheet, and trace the pattern on the new sheet of paper. Then, cut out the pattern, and use it as a ruler to follow the amounts to be paid for each fortnight. We can now use this pattern as a template, to add up the cost element amounts, that will be paid during the project for each period. Let us continue and add up the cost element amounts to be paid at the end of the first 2 weeks. You will find that, moving across the template, only labor, indicated as 3,000 Rand, needs to be paid after 2 weeks. Record this amount in the row for week 2 under the expenditure column. To calculate expenditure for week 4, all you need to do is move the template down, so that week 4 is revealed. Then, again, add up the amounts just above the template. The total to be recorded for week 4 is 8,800 Rand. Do the same for week 6, where the total to be recorded is 4,600 Rand, and week 8, with a total of 19,950 Rand. Continue this process for week 10, 7,233 Rand, week 12, 33,417 Rand, and so on, until week 28. The reason for calculating up to week 28 is, because that is beyond the time we shall receive our last payment from the client. According to the exercise brief, the last retention is released after 3 months, or by the end of week 26. This completes the process of calculating and recording the expenditure, or outflow of money on a project. Let us move on to the cumulative expenditure column. At this point, the calculations for this column should be very easy, as the process for performing cumulative calculations have already been explained earlier. So, let us get straight into the calculations. The cumulative expenditure at the end of week 2 is calculated at 3,000 Rand. Week 4, 11,800 Rand. Week 6, 16,400 Rand. And so on. This calculation is also continued up to the end of week 28, for the same reason as explained previously. You may also notice that the total cumulative cost and total cumulative expenditure both indicate 90,000 Rand. All this tells us is that the total project cost is equal to the total amount of money that will be paid to cover these costs. This is also a check to see whether we were correct in performing our calculations up to this point. Before we continue with the calculations to determine the cumulative gross value, we need to clear up some concepts. Let us first look at what is meant by the term value. In construction, value relates to the amount to be paid to a contractor for completing a project. This amount includes the contractor's profit. However, because construction projects require huge financial inputs, which is a burden on a contractor's cash flow situation, clients will make periodic payments to contractors to relieve this financial burden. These periodic payments usually occur monthly, and the amount to be paid is based on measured work completed at the end of a month. Thus, value, relative to construction, refers to the amounts to be paid periodically until the project is completed. The term gross value refers to an amount before any adjustments, usually deductions, are made to it. That is why the document that certifies the amount of work completed is referred to as a valuation certificate. By means of this calculation, we determine the gross value of work done, before adjusting the amount to be paid. The cumulative gross value calculation uses cumulative monthly cost and the contractor's profit margin. Calculating the amount to be recorded in the cumulative gross value column is very easy. All we need to do is add the percentage profit, stipulated as 10% on cost, in the exercise brief. The method used for this calculation involves simply adding 10% as a fraction to the cumulative monthly cost. Before we continue with the calculation, let us first clear up some mathematical concepts. 10% can also be expressed as 1 over 10, or 1/10, which is equal to 0.1. To mathematically add a fraction to an amount, you need to multiply this amount by the fraction to be added, plus 1. This basically says multiply x amount by 0.1 plus 1, or by 1.1. For example, let us add 10% to 2000 by using this technique. 2000 times 0.1 is equal to a fraction of 2000, and equals 200, plus 2000 times 1, which equals 2000. The total is thus 200 plus 2000, which equals 2200. Therefore, for this calculation, we shall multiply the cumulative monthly cost by 1.1. So, let us get on with the calculation of week 4. Note, the cumulative monthly cost for week 2 is 0, and it is therefore pointless to do this calculation. Now, go to the cumulative monthly cost column in week 4, and find the amount indicated as 24,250 Rand. Multiply this amount by 1.1, which will result in 26,675 Rand. Record this amount in the row for week 4, under the cumulative gross value column. We should also do the calculation for week 6, but you will observe that the amount in the cumulative monthly cost column is the same as that for week 4, and therefore we can also just copy the amount for week 4 in the cumulative gross value column. Continue the calculation for week 8, 66,550 Rand, and so on. You will notice that this calculation is only done up to week 12. The next column to be considered is net monthly income due. The title for this column should actually read net monthly revenue due instead of income due. The reason for this is that, in accounting terms, revenue is the amount of money generated by a contractor through the process of construction, and includes income, which in fact only relates to the profit made in this process. Revenue therefore relates to the inflow or receiving of money for work completed or services rendered, relative to the terms of a contract that entitle the right to compensation for work completed or services rendered. Being paid, in terms of a contract, puts the right to compensation into action. What we shall be calculating in this column is the amount of money, or revenue, that should be paid to the contractor at intervals, as indicated in the example brief, which relates to the terms of the contract between the contractor and the client. This amount includes all the adjustments made to the value of work completed at these intervals. In construction, the process of paying contractors at intervals is referred to as progress payments. The contractor's entitlement to receive payment usually takes place in intervals as the work progress, but may also depend on what was agreed in the building contract. According to the assignment brief, we know that certification for progress payments take place once a month, and payment will be received 2 weeks after the date of certification. However, the brief also stipulates that 10% retention will be deducted on each claim throughout the project, of which 5% is released at practical completion, and the remainder after a maintenance period of 3 months. In this calculation, we therefore need to make provision for an adjustment to the amounts to be received, but also for delays, to reflect the true timing of the inflow of money. The amounts recorded in this column therefore give an indication of the net amount to be paid on a time schedule. The result of this calculation will therefore reflect the timing of cash inflow. This forms part of cash flow, and is one of 2 activities that take place within cash flow. The other is cash outflow. However, it also makes provision for an adjustment to the amount to be paid, relative to retention. We shall again make use of information obtained from the cumulative gross value column to calculate and record the income due, or revenue due, for the relevant periods. However, to do this we need to make use of another form, referred to as Form 1. We shall now move to Form 1 to perform these calculations. Before we start with the calculations, let us first explore Form 1. You will observe that it consists of various columns. The one on the left is used to record the month under consideration. The second is used to give a description to the calculation to be performed. And the remaining 3 is used for the actual calculation. The calculation for each month consists of various aspects to be considered. These are described in the second column and have the following functions. Amount due, valuations certificate X. This is the cumulated amount obtained from the budget worksheet, under the column for cumulative gross value. Less retention. This indicates the percentage retention to be used in your calculation. Remember, the amount used to calculate the percentage retention is cumulated. This is important, because when retention is released towards the end of the project, the percentage used in the calculation is reduced. Total payment due to date. This is the cumulative total payment due to the contractor, after deducting the cumulated retention for the project. Less previous payment. Because the figures from the budget worksheet are cumulated, we need to convert this into non-cumulated figures. This is done by deducting all previous cumulated payments. Amount due valuation X. This is the non-cumulated single amount in progress payments to be made to the contractor. If you add up all these amounts at the end of the contract, they should be equal to the total cumulated value of the project. Now, let us continue with the calculation for month 1. First, let us draw the information from the worksheet. Before we find the amount to be used in our calculation, remember, valuations are done monthly. Therefore, the amount to be used is that indicated in week 4 as 26,675 Rand. Record this amount on Form 1, next to amount due, in the third column. Next, calculate 10% of the amount just recorded. The answer should be 2,667 Rand and 50 cents. Record this amount next to less retention. To calculate the total payment due to date, deduct the amount of retention, 2,667 Rand and 50 cents, from the amount due, 26,675 Rand. The answer should be 24,007 Rand and 50 cents. By month 1 it is obvious that no previous payments were made, and therefore, for month 1 there will be no deductions for previous payments. The amount to be recorded is, therefore, 0. You can now continue to calculate the single amount due for valuation 1, by deducting the previous payments, which, at this stage is 0 from 24,007 Rand and 50 cents. The amount due for valuation 1 is thus, 24,007 Rand and 50 cents. The calculation for month 2 will be as follows. Find the amount due for week 8, or month 2, indicated as 66,550 Rand, on the budget worksheet. Record this amount on Form 1, next to amount due for month 2, in the third column. Next, calculate 10% of this amount. The answer should be 6,655 Rand. Record this amount next to less retention. Calculate the total payment due to date, by deducting the amount of retention, 6,655 Rand, from the amount due, 66,550 Rand. The answer should be 59,895 Rand. By month 2 there would have been some previous payments made. To determine this amount, go back to month 1 and find the total payment due to date, which is indicated as 24,007 Rand and 50 cents. Then, record this amount next to previous payments in the fourth column. Now, continue to calculate the single amount due for valuation 2, by deducting the previous payments, reflected as 24,007 Rand and 50 cents from 59,895 Rand. The amount due for valuation 2 is thus, 35,887 Rand and 50 cents. Let us calculate the amount due for valuation 3. The process will be exactly the same as for the previous 2 months, but with one change. Again, transfer the amount due, indicated as 99,000 Rand, for week 12 from the budget worksheet. When calculating the retention, take note. This is where the change, that we referred to earlier occurs. You will note that the percentage to be deducted has changed from 10%, used up to now, to 5%. Remember, the brief stated that retention will be reduced to 5% at practical completion, or the end of the contract. That is exactly what we did here. We reduced the percentage from 10 to 5%. The amount to be recorded here is thus, 4,950 Rand. The total payment due to date, is calculated as, 94,050 Rand. By deducting 59,895 Rand, which is the previous cumulative payments, obtained from month 2, will result in the amount due for valuation 3, calculated as 34,155 Rand. The final amount to be paid to the contractor will occur 3 months after practical completion. Therefore, this amount will be paid out by the end of month 6. The calculation will again follow the same pattern as previous months, but this time, the retention amount will be reduced to 0%, which means that the last portion of retention is released, and 0% is kept by the client. The amount to be deducted for previous cumulative payments from month 3 is 94,050, and the final amount to be paid to the contractor is thus 4,950 Rand. This completes the calculation of amounts due for the various periodic payments to the contractor, on Form 1. We can now move back to the budget worksheet to record these amounts. All we need to do now is to use the amounts from Form 1 and record it on the budget worksheet. However, there is a catch. Remember, according to the assignment brief, progress payments will take place 2 weeks after the date of certification. So, if certification took place at the end of week 4, then the first progress payment should be received by the contractor 2 weeks later, that is, at the end of week 6. The same will apply for week 8, where payment will take place in week 10, and week 12, where payment will take place in week 14. The final amount will be paid in week 26. Now, let us transfer these amounts to the budget worksheet, but before we do that, remember to round off all the amounts to 0 decimals before you transfer them. Now transfer the following under the net income due column. Month 1, 24,008 Rand, to week 6, rounded up. Month 2, 35,886 Rand, to week 10, the amount is rounded down, otherwise you will have 1 Rand too much. Month 3, 34,155 Rand, to week 10. And, for month 6, 4,950 Rand, to week 26. This completes the recording of net monthly income due amounts, from Form 1. All we need to do now is to cumulate the net monthly income due amounts under the cumulative income due column. The cumulation calculation is exactly the same as previously explained. Because there are no amounts recorded for the first 4 weeks, let us start at week 6, with a cumulated amount of 24,008 Rand. Week 8 will be the same as week 6, week 10 result in 59,894 Rand, week 12 the same as week 10, and carry on the calculation until week 28, with a final cumulative amount of 99,000 Rand in week 26. This brings us to the end of cumulating the net monthly income due amounts. Next, we need to determine the gross cash flow. Gross cash flow is the money available, at a certain point in time before receiving a progress payment, or revenue. We shall use the amounts in 2 columns to determine the gross cash flow. These are the cumulative expenditure column, and cumulative income due column. To perform this calculation for a specific period, we shall use the amount in the previous period, under the cumulative income due column, and deduct the amount in the current period, under the cumulative expenditure column. This is a dogleg calculation. Let us perform the calculation, and it will explain itself. Let us start with week 2. Go to the cumulative income due column and select the amount in the period before week 2, or week 0. You will find the amount is 0. Then go to the cumulative expenditure column in week 2. You will find the amount is 3,000 Rand. Now, deduct 3,000 Rand from 0. The result is minus 3,000 Rand. Record the minus 3,000 Rand under the gross cash flow column for week 2. The fact that the answer to this calculation results in a negative amount is nothing to be worried about. This is only an indication that you will have a negative bank balance in week 2, and is a result of delayed progress payments, and paying current cost commitments. Then repeat the process for week 4. Amount for cumulative income due column in week 2, 0, minus the amount under the cumulative expenditure column in week 4, 11,800 Rand. Record the answer, minus 11,800 Rand, under the gross cash flow column in week 4. We repeat the calculation for week 6, resulting in 0 less 16,400, which equals minus 16,400 Rand, and week 8, resulting in 24,008 less 36,350, which equals minus 12,343 Rand. Continue with the calculation until week 28. you will observe that the cash flow before receiving payment will remain negative until week 16. However, this is not the full picture, and we still need to calculate the net cash flow to get a sense of the full cash flow situation during the project. So, let us not linger. Next, we need to determine the net cash flow. Net cash flow is the money available, at a certain point in time, after receiving a progress payment, or revenue. We shall therefore use the amounts in two columns to determine the net cash flow. These are the cumulative expenditure column, and cumulative income due column. To perform this calculation for a specific period, we shall use the amount in the current period, under the cumulative income due column, and deduct the amount in the current period, under the cumulative expenditure column. This is a straight calculation. Let us perform the calculation, and it will explain itself. Again, let us start with week 2. Go to the cumulative income due column, and select the amount in the current period of week 2. You will find the amount is 0. Then go to the cumulative expenditure column in the current period of week 2. You will find the amount is 3,000 Rand. Now, deduct 3,000 Rand from 0. The result is minus 3,000 Rand. Record the minus 3,000 Rand under the net cash flow column for week 2. Again, do not let the negative amount worry you, as explained earlier. Repeat the calculation for week 4. The amount under the cumulative income due column in week 4, 0, minus the amount under the cumulative expenditure column in week 4, 11,800 Rand. Record the answer, minus 11,800 Rand, under the net cash flow column in week 4. Do the same for week 6, resulting in 24,008 less 16,400, which equals 7,608 Rand, positive, and week 8, resulting in 24,008 less 36,350, which equals minus 12,342 Rand. Continue with the calculation until week 28. You will observe that the cash flow, after receiving payment, will slip in, and, out of negativity from week 6 and then become positive from week 14 onwards. This, however, still does not give us a full view of the cash flow situation during the project. For that, we need to draw graphs. This brings us to the end of calculating the budget worksheet. Using graphs, provide us with a method to look at figures by means of a picture, whereby we can make comparisons. From the worksheet, it can be observed that certain trends emerge, relative to cost, revenue and cash flow. Graphs can be a very handy tool to track these trends. Thus, we would like to consider the cash flow, and compare cost relative to value, and expenditure relative to revenue, on a time scale. This can be achieved by means of the cash flow graph, and budget graph. So, let us start with the preparation of the graphs. The following columns are used to develop graphs for cash flow and budget graphs. For the cash flow graph, we shall use the gross and net cash flow columns in the budget worksheet. For the budget graph, we shall use the following columns from the budget worksheet. Cumulative monthly cost, cumulative monthly gross value, cumulative expenditure, and cumulative income due. Let us start with the cash flow graph. This represents a normal sheet of graph paper. To prepare the graph paper for a cash flow graph, we need to do the following. Find the middle of the sheet on the vertical scale, and mark this position as 0 on the vertical scale. Determine the monetary value that will be used for the vertical scale, using positive numbers above the center, and negative numbers below the center. Also make sure your scale will be able to accommodate the maximum and minimum amounts, reflected in the budget worksheet, under the gross and net cash columns. For this exercise, we shall be using 25,000 Rand as a maximum and minus 25,000 Rand as a minimum, because the amounts in the gross and net cash columns do not exceed these amounts. Determine the time duration, in 2-week intervals, on the horizontal scale, and make sure your scale will be able to accommodate the time scale for the project. For this exercise, we need to fit 28 weeks on the scale. The scale allows us to fit in 30 weeks. The graph sheet is now ready, and we can start to draw the graph. We shall be using the amounts, under the gross and net cash columns in the budget worksheet, to draw the cash flow graph. Start off with considering the amounts in week 2. Now, go to the graph sheet, and start at 0 on the vertical axis, then draw a red dotted line on the horizontal axis up to week 2. The reason why this line is dotted is because we use it to indicate that no cash activity is taking place, and to demarcate cash flow on the graph. Remember, cash flow consists of periods of activity and non-activity. As we develop the cash flow graph, this will become obvious. Let us continue. At week 2, according to the budget worksheet, the cash flow is negative by 3,000 Rand for both the gross and net cash columns. So, draw a solid red line, in a negative direction on the vertical scale, up to minus 3,000 Rand. Record the amount at this position. The reason why the line is red and solid, is because we use it to indicate that a negative cash activity is taking place. Then continue with the dotted line, on the horizontal scale, up to week 4. According to the budget worksheet, the cash flow is negative by 11,800 Rand for both the gross and net cash columns. So, draw a solid red line, in a negative direction on the vertical scale, up to minus 11,800 Rand, and record the amount at this position. Continue with the dotted line, on the horizontal scale, up to week 6. The worksheet indicates, gross cash is negative by 16,400 Rand. So, draw a solid red line, negative on the vertical scale, up to minus 16,400 Rand, and record the amount. However, the worksheet also indicates that, net cash is positive by 7,608 Rand. So, from the negative position at minus 16,400 Rand, draw a solid blue line, positive on the vertical scale, up to 7,608 Rand, and record the amount. The reason why this line is blue and solid, is because we use it to indicate that a positive cash activity is taking place. Continue with the dotted line on the horizontal scale, up to week 8. The worksheet indicates that, cash flow is negative by 12,343 Rand, for both gross and net cash columns. So, draw a solid red line, negative on the vertical scale, up to minus 12,343 Rand, and record the amount. Draw the dotted line up to week 10. The worksheet indicates that, the gross cash is negative by 19,576 Rand. Draw a solid red line, negative, up to minus 19,576 Rand, and record the amount. However, the worksheet also indicates that, the net cash is positive by 16,312 Rand. From the negative position at minus 19,576 Rand, draw a solid blue line, positive, up to 16,312 Rand, and record the amount. Continue this process until week 28, always referring to the budget worksheet, relative to the week, and the gross and net cash amounts separately. As soon as we are finished drawing the lines, we use red to shade the areas, demarcated by the dotted and solid lines, on the negative side of the graph. Do the same on the positive side of the graph, using blue shading. Considering the completed cash flow graph, you will be able to observe the following. The final profit of the project, indicated as 9,000 Rand. The shaded areas in red indicating the periods and amounts of negative bank balances, also referred to as deficit cash. The blue shaded areas indicating the periods and amounts of positive bank balances, also referred to as surplus cash. Should the contractor start the project with a 0 Rand bank balance, the graph reveals the cash flow position of the contractor, at various stages of the project, relative to the maximum negative cash requirement, or overdraft needed for the project, indicated as minus 19,576 Rand. And, the maximum positive cash available, or positive bank balance to the contractor, indicated as 17,050 Rand. This brings us to the end of preparing the cash flow graph. We shall now continue to prepare the budget graph. This, again, represents a normal sheet of graph paper. To prepare the graph paper for a budget graph, we need to do the following. Determine the maximum monetary value, which is reflected in the budget worksheet, under the cumulative gross value column. This amount will be used as the maximum value on the vertical scale, reflected on the left-hand side of the graph paper. Make sure, your scale will be able to accommodate the maximum amount. For this exercise, we shall be using 100,000 Rand as a maximum on the vertical scale, because this is more than the maximum in the worksheet. Determine the time duration, in 2-week intervals, on the horizontal scale, and make sure your scale will be able to accommodate the time scale for the project. For this exercise, we need to fit 28 weeks on the scale. The scale allows us to fit in 30 weeks. The graph sheet is now prepared, and we can start to draw the graph. We start off by drawing the cumulative cost line. To do this we need to refer to the cumulative monthly cost column in the worksheet. The amounts reflected are 24,250, 60,500, and 90,000 rand. We now plot these amounts, relative to the horizontal scale, at monthly intervals, that is, every 4 weeks, and relative to the vertical monetary scale. Thereafter, draw a red dotted line, connecting these positions on the graph paper. Next, we deal with the cumulative gross value line. Here, we need to refer to the cumulative gross value column in the worksheet. The amounts reflected are 26,675, 66,550, and 99,000 rand. Plot these amounts, relative to the horizontal scale, at monthly intervals, and relative to the vertical monetary scale. Thereafter, draw a blue solid line, connecting these positions on the graph paper.
Cumulative expenditure is the next line to be drawn. Similar to the cash flow graph, here, we shall also be drawing only horizontal and vertical lines. The reason is that we are dealing with cash flow, and cash flow has periods of activity and non-activity. The procedure will thus be the same, however we shall only be using the amounts from the cumulative expenditure column in the worksheet for this line, but we shall still plot the graph on a 2-weekly basis, and use a red pen. Start at 0 on the horizontal scale and draw a dotted line, up to week 2, then use a solid line to move up to 3,000 rand on the vertical scale, and record the amount. Again, draw a dotted line on the horizontal scale, up to week 4, then use a solid line to move up to 11,800 rand on the vertical scale. Record the amount. Continue, and draw a dotted line on the horizontal scale, up to week 6, then use a solid line to move up to 16,400 rand on the vertical scale, and record the amount. This procedure is repeated up to week 28. The last graph line to be drawn is the cumulative income due. Here, the same procedure will be followed as for cumulative expenditure. However, we shall only use amounts from the cumulative income due column, record them on a monthly basis, and draw with a green pen. Note that the first amount of revenue, reflected in the worksheet, only occurs at week 6. So, to start off with, start at 0 and draw a dotted line on the horizontal scale, up to week 6, then use a solid line to move up to 24,008 rand on the vertical scale, and record the amount. Then draw a dotted line on the horizontal scale, up to week 10, use a solid line to move up to 59,895 rand on the vertical scale and record the amount. Continue this procedure up to week 28. Now, shade the areas below the red lines and above the green lines, in red. This reflects the deficit cash of the project. Then shade the areas below the green and above the red, in green. This reflects the surplus cash for the project. The profit can also be read off as 9,000 rand. The budget worksheet, together with the cash flow and budget graphs, are therefore very handy instruments for obtaining finance for a project. This concludes the section on planning the cost dimension. Please look out for the quizzes and assignment that will follow. The next session covers assigning responsibility. Thank you.